I'm going to break the discussion of the income statement down into multiple short videos, and in each video we'll take a different section. Before you actually finish this video and we talk about where the revenue numbers would come from, I hope you have read the chapter on the income statement, at least up to the point of where they start doing the ratios, because we will do that later on. The income statement that's illustrated in the text and the one that I have here on the screen is the general format recommended by the Farm Financial Standards Council. There certainly could be other categories, but these are the typical ones and the ones that would fit Northeast Louisiana pretty well. In this video, we're going to talk just about the revenue section of the income statement. We will use a separate video for the other components, so this one is just about revenue. When we talked about the balance sheet, you will remember that the balance sheet was a financial statement that described what the business owned and what it owed at one point in time, and that point in time was typically the end of the fiscal year. Now, the income statement is very different. It's a summary of the revenue and expenses that take place all during the year. So whereas the balance sheet represents an instant in time, like a snapshot, the income statement is a full fiscal year reporting, but it is a summary. It's not all the detail. The detail comes in the chart of accounts. Every number that goes on the income statement, so when we look at this income statement and we look at each of these rows for the two major categories, every number comes from somewhere in the chart of accounts. There would be nowhere on the income statement that you would actually type in a number. The numbers are all supported by something in the chart of accounts. Now, because we are teaching a record-keeping system based on accrual accounting, the revenue section is broken into two major categories: cash revenue, in other words, items you actually sold on the farm, and accrual adjustments, which means changes in the value of things that you have on hand at the end of the year. Now, some students still struggle with that because they're very accustomed to just a cash basis accounting system. But you got to remember, a cash basis accounting system does not give you true results of what you did on the farm. So you can't really monitor the effectiveness of your management with a cash system, because it simply will give you biased results based on how you actually sold the items. So you need the accrual adjustments, because that forces everything into the correct time period. Okay, first section here is called cash revenue. So this section of the income statement is simply where you sold items. In other words, these are items that you produced on the farm and you sold for cash during the year. It is important to understand, very important, so listen carefully. These are only items that you actually produce on the farm for sale. You would not record a sale here of something like an old piece of farm machinery, or a parcel of farmland, or something like that. This category is for items that are produced on the farm for sale. The only real exception to that, if you look in the textbooks format, they have a row in here for cull breeding stock. In other words, they come in here and have an item right here that says cull breeding livestock. Now, sometimes students ask me, they say, well, but what's the difference between selling breeding stock and selling old machinery? And the difference is, according to Farm Financial Standards recommendations, it's sort of an exception to sell old machinery. Sometimes you do that. Sometimes you sell a piece of land. But if you're in a breeding herd with animals, you are going to sell the older breeding animals simply because the biological nature, they get to a point where you've got to sell them. So that's typical, I guess you would say, whereas selling off something like machinery or land is not. Maybe that's a little fine point, but Farm Financial Standards does say to put cull breeding stock into the income statement illustration. Now, later on we talk about taxes, we'll talk a lot about how you actually handle that sale. So this cash revenue section is strictly the revenue that you get from actual sales of products produced on the farm during the year. So where do the numbers come from that go in these different sales? Well, the numbers come from your ledger account. That ledger account is just like we referred to it in the when we were talking about the chart of accounts. You have a ledger account where you record the different sales during the year. So the items that go in this little group right here simply come from your ledger of revenue. Sorry about the handwriting. You'll remember back when we talked about the chart of accounts, we built a revenue ledger where we sold things during the year and then we categorized it into different categories. So in this little illustration, we had sales of corn, we had sales of soybeans, wheat, market steers, co-op breeding stock, and government programs. All of these items were where we received cash on the farm. Well, at the end of the year, you would get totals right here. Those totals would simply go right in these cells on the income statement. And that's where you actually get the numbers that go into the cash revenue. All right, the second section of the revenue portion is accrual adjustments. Now you got to be real careful here because sometimes students get confused about what goes in this accrual adjustments section. You'll notice that accrual adjustments are changes, and they see the word change, that word change in different categories of things that would represent income on the farm. So you got changes in your crop inventory, you got changes in your market livestock inventory, you got changes in accounts receivable, and changes in the value of raised breeding stock. So where do the numbers come from that go in these categories? Because they're not cash receipts. They're changes in value of those items during the year. If you go back and look at the chart of accounts, we had a chart of accounts illustrated to you for crop and livestock. Now remember, this is market livestock, not breeding livestock. So let's just go take a look at one of those. Let's say corn. At the end of the first year, you had corn in storage worth $29,500. Okay? Now that's not an income statement number. That's value of something that existed. Okay? At the end of at the end of the next year, you had value in storage of $45,625. Again, not an income statement. Those numbers go on the balance sheet because they are something you owned. But the difference in the 2 years, in other words, that's what's something that took place during one fiscal year, because you went from December of 31st of one year to December 31st of the next. That change in value right there, that's income. Because the fact that the corn in storage went from 29.5 to 45.6 means you had to produce some extra corn. So when you produce that extra corn, that is something produced on the farm. It has value, so it becomes an accrual adjustment. Be very, very careful here now that you understand that this group right here, these values, go to the balance sheet. They are not income because they're something you own in total. But this number, that change in that value, that's what actually goes to the income statement, to the sales that we're illustrating right now. Now, of course, back on, and excuse me, I apologize. The same thing goes for livestock. December 31st of one year, you have this number. December 31st of next year, you have this number. Those two numbers go to the balance sheet for the consecutive years, and the change is what goes to the income statement. Okay. Now, back on the income statement. What would go for crops right here would simply be a sum of all the changes in all the crop inventories. Now, if you wanted to have more detail, you could list the crops underneath here, but conventionally, you've got that detail in the chart of accounts, so why do you need it in the income statement? So you would sum all here. You would sum all your market livestock here. The same exact thing goes for accounts receivable. When you go back to the chart of accounts that we discussed earlier and look at accounts receivable, what goes right here in this cell is the change. So if somebody owed you $500 at the end of one year and $1,000 at the end of the next year, that extra $500 is something you sold extra that you produced during the year. So the change is what goes here. And of course, the same logic goes for breeding stock. Now remember, we make these accrual adjustments in this segment here so that we force everything that is of value that changed on the farm during the year to the correct year, whereas a cash system would simply give you a bias because it might create too much cash in one year or too little. But by making these inventory adjustments, we're forcing everything into the correct year. And then from year to year, we can make better management evaluations of how the farm is doing. Total revenue down here would simply be a sum of all the cash revenue and all the accrual adjustments. So real quick summary, don't forget, the cash revenue comes from the ledger accounts. The accrual adjustments come from the different portions of the of accounts, the chart of accounts, but it comes from the changes in the chart of accounts, not in the actual values.